restarting my computer, but by restarting my computer, I also lost a ton of charts. Uh, so it has been quite a mess, but yep, all that doesn't matter. We're here, we're live, and let's hope that everything is going smoothly as well with the stream, because the settings of the stream once again is not working. Is reset as well. So let's jump in and let's start with how everything is going in the rest of the world. Yeah. So let's see. Okay. United States is at 671,000 confirmed cases, and sadly enough, also today, well, not today, yesterday is confirmed also the largest amount of people that died in one day over the whole world. So that's a very sad thing to see. But yeah, as you can see, the cases are still ongoing, going up every day, and yeah, hopefully this trend will start to flatten very, very soon. So let's go and look at the chart. Boom. So we are at 2.1 million and 65,000 people, and yeah, you can see the chart is starting to flatten finally. Also the sadly enough, also the recoveries, because there's less cases, I guess, and also the death rate. So that's a good thing. So let's look at the country charts. America is still going up, but it's slowing down. Spain finally is flattening, as you can see. That's a very, very good sign. France, like I told you guys, I think it was yesterday, yesterday it went down, and then now you can see it spiked back up, second wave. Not good. Germany is flattening. UK is still going up. Italy is still going up. So yeah, overall things are flattening very, very slowly, but yeah, there's always that second wave as well. So not looking good, not looking good. Anyways, because everybody is so adamant about finding a cure for the coronavirus, this is a very interesting article that I've read just yesterday. I'll pull it up for you guys. So this is Gilead, or I don't know how you want to, on Zero Hedge. Basically, what happens is there was a report that yesterday a trial of remdesivir patients with COVID-19 clinical trial, that it worked out really, that like one of the medicines was tested, and it was basically, they said that remdesivir would work. But the problem is, so when they reported it, what happened is, obviously everybody became very, very bullish, and the S&P went up very, 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 very quickly. But then it was reported by CNBC, as you can see here. The news was reported by CNBC and hit the retail investing audience. And then the Gilead stock, so from that company, Gilead, stock soared 16, and the entire market took off as someone suddenly discovered not only a cure but also a vaccine for the coronavirus. But as you can see, neither happened. It was done on numerous occasions previously. About 3 hours later, news broke that one of or more hedge funds ample opportunity to offload their position in the 10 hours market. So basically, what happened is they then issued a statement that the stock was based on nothing more than anecdotal reports. We understand the urgent need for the treatment and resulting on the data. The totality of the data need to be analyzed in order to draw any conclusions from the trial. So yeah, once again, so basically this is what happened. S&P, miracle drug, everything pumped up. And then obviously, yeah, distribution right there, guys. Distribution right there. Pump and dump. Let's put it like that. And I'm sadly enough, a lot of people still are not aware of this situation, and probably are still, you know, thinking that we found the cure for the coronavirus. But sadly enough, that is not the case. So let's jump in immediately to our S&P or the mini futures. Some of my charts, sadly enough, have disappeared. So we'll have to, oh, this is the 1 hour chart. And this is basically what everybody was talking about. We had here accumulation, as you can see, accumulation. Then suddenly the news broke here. It started pumping, as you can see, pumped even up higher. This is all retail that is stuck with the bag. And what happened then? Here it got offloaded already by that hedge funds company. And as you can see, people still think that this is a buy. And yeah, we're still in this zone right now where we are testing the resistance. But yeah, most likely this is going to be a drama for, once again, retail public that is not aware. Although this can, as you can see, there's still space to go up a little bit more. And if you look right now, yeah, here you can see we got the signal, the historical volatility percentile flat. As you can see right now, stocks are turning down. RSI is currently below the EMA, so that's not very good. That's not very good. Most likely this is going to be rolling over and back to the mean. And then who is sitting with the hot potato? Of course, the retail, because the hedge fund already dumped their stocks. And yeah, once again, the retail will be stuck with the funds, and definitely over the weekend right now. So that's what I'm seeing for the S&P. Let's go to a little bit of a higher time frame, the 4 hour. As you can see here, still things look not that bad overall. As you can see, we're still in this huge rising wedge. And yeah, as long as we are trending here, things most likely will go up a little bit. I mean, can still go up a little bit more, as you can see. But once we break this rising channel, things will be definitely not looking good. But it's not that bad yet. We are still in the bullish control zone right here. If we get rejected from this zone and break down below the EMA, then things will look a lot nastier for sure. But for now, things are still looking quite okay. I'll just put it back in the 1 hour because I want to see what is happening on the more short term there. So one of the leading indicators of the market has been the Nasdaq, actually. So this is the Nasdaq Futures that I've been looking at. And as you can see, Nasdaq did exactly the same thing. We had a major pump here, as you can see, when that news broke out. Here, the major pump here that went up. But once again, very dangerous situation, because here, as you can see, during that pump, the volume went down substantially. That means that this is most likely not a sustainable price point at this point here. So even though that it can maybe wick a little bit higher, but at one point it's most likely going to drop back down. And then since Nasdaq is like a leading indicator, I'm very curious where we're going to be ending, closing our weekly candle for because tomorrow, of course, it's weekend already, and then yeah, markets are going to be stopping very soon. As you can see here, RSI is already dropping below the EMA. So yeah, and stocks are curling down. Historical volatility percentile is flashing. Yeah, we see a lot of I don't think this is going to be holding. Maybe we'll get a little, you know, the last cramp up, but this is most likely going to be trending down. So that's what I'm looking at. Boom. Let's go quickly over to the SPY. Okay, SPY here. historical volatility percentile is flashing because the pre-market is ongoing right now. We still have 1 hour for the pre-market. 9:30 is when the stock market will open. We can see that there is, let's go on the 4 hour. Right now we had already a push up here. This actually looks quite toppy. We can see that the pre-market price is at 286, so we will be opening right now here at this point, which is the higher high above the EMA 100. Let's see how long we're going to be lasting and holding that spot there. But once again, this looks very toppy, as you can see here. Already starting to curl down. But here, this is very positive. But like I said, we don't know when the market opens how the RSI is going to be reacting, because right now we are still on the pre-market phase and not on the opening of the market. So I do think that when the market opens, we'll still be hovering like maybe 282 or something like that. Yeah, 282, maybe just an order block at this order block here, and a little bit below the opening of a couple of days ago on the high. But I do think that we will be going down afterwards, sadly enough. So those are my thoughts on the traditional markets. For now, it's very sad that we saw that article, obviously, about the coronavirus. Let's do hope that we find a very possible cure very soon, because right now there are over 20 million people in the US that are asking for help because they are unemployed right now, and people don't know this, but it makes no sense, right? When the economy is completely in a lockdown, nothing is being produced. Well, nothing that is not 100%. Everything is on basic goods and this and that. So when nothing is being produced, people are unemployed, people don't have money to be spending. How can a company be doing well, except for some company, of course, who are profiting in these kind of markets? But other than that, the economy is going down. Like I think Starbucks already gave notice that their revenues will be, for the next quarter, will be down 45%. So if the company is not making profits, how can the stock of that market go up? That's pretty much impossible, right? So that's what is going on, and we have to be aware of the situation. But the market is obviously, the stock market, what we're seeing is not the reality, right? It's a lagging. What happens is the economy is lagging behind everything. So we have to wait until people realize all of that, and then things will come back to normal, right? So let's go to our Bitcoin. Sorry, like I said, there's something happened when I restarted my computer. My daily chart got removed, so I had to quickly redraw things a little bit. But this is basically what we were at, and well, maybe it's a good thing, because then I can show you guys how I'm drawing the everything, right? So this is the green box that we've been talking about for a really long time already, where, as you can see, the price is basically like a pivot point. So the most important point and price is over there, which is here, right? So around the 6.9k is what has been our story of the day, right? So yesterday I got stopped out of my position because we went up here all the way to 7,246. I never expected that the price would go back up that high. So some people are thinking already like, okay, this is a breaking out of our channel, right? So as you can see here, I'm talking about this spot here. We are peaking, a little peak above the resistance line. So what does it mean, right? So what does this all mean? So first of all, let's go back to our big green box that we have to put over here, which is our ultimate shorting position, right? So something that we've been talking about for a while as well, between 7.7 to like 8K, something like that. I'll lower this a little bit. So yeah, around 8,000 and 8,000 and 21, something like that. And this one we can make it a little bit tighter, maybe 7, 8-ish, something like that, to have a round number. So this is where we're at. Right now we are back once again at the 7.1 price, which is the same position that we were at last week, basically. So the same strategy that we are looking at. If we break above this zone here at like 7.2K, then we have a chance that we break above and go towards our 7.7K or 7.8K, and that's basically this. So this is actually a falling channel, which is actually, it breaks up most of the time to the upside. So if we do that part, if we make a measured move from that part and we break out here, as you can see, the measured move would extend all the way to our green box on the top. So that's basically if we are looking at this as a bullish pattern. So if this one breaks, like I said, if this one breaks above and we start closing candles above this EMA 55, which is where we got rejected, 7.2K, it's very simple. Most likely we will have a continuation first to like this line here to the EMA 100, which is like around 7.6. I think a small retracement there, and then we go all the way up towards our 7.8, 7.9K level. So if we break this zone here, let's go back to my brush. So if we break this zone, close above this spot, we'll most likely go here, get a small rejection, and end up here. That's basically what the goal is, and what's basically a possibility. And definitely, as you can see, this is a falling channel. And like I said, measured move makes sense, makes all the sense in the world. So this is very possible. And another thing that we can look at is what I've been talking to you guys before on the 2-day chart, this bearish cross that happened in the past. Let's look here. The bearish cross happened in the past. What happened is that when we had that bearish cross, price actually went and touched here, the orange line, the EMA 55. After the bearish cross, approximately from here to here is about, what's that, 4 September to 14 October. So around a 1 month period that we had the retest, what we call a retest of the cross. And as you can see here, from this point we had the bearish cross, and from the 27th of March until here, we are approximately, well, we are on the 17th of April now, so we're approximately, not yet, we'll be almost 1 month. So a retest of this orange line would kind of make sense, right? So if we retest this area, the orange line is at 7,620 and the blue line is at 7,820. And what do you know? That is, of course, this green box here that we're targeting. So it's definitely a possibility. It happened in the past twice, and I will show you the one in 2014. It's exactly the same. Let's go back to 2014 when we get that cross. Here. So as you can see here, bearish cross happened here, and then what happened, price went from the bearish cross, which is 16th of October, to 13th of November, so approximately 1 month. And as you can see, it retested here the EMA 55 and even retested the EMA, the blue line, even the EMA 200. So that's what happened in 2014. So why could it not happen once again? Like I said, we can have a bearish cross here, takes approximately 1 month, and then it touches and retests the orange line or the blue line, which coincides with our green box. And also our falling line here, resistance line that has been since our last high at 10,500. So if we make a resistance trend line here, all the way from here down, it would make sense that, you know, we break out here, zoom, 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 like I said, and we touch here, and then we get rejected from there. So that's the bullish scenario. So a lot of talk has been about this little peak here, right? That's we can obviously look at it at two ways, right? This can be a falling wedge, but what happens if this is a rejection? If we get a rejection, then of course this is still a downtrend. So we still have not confirmed yet that we are going to go to that green box. There is still a chance that we go back down here. If we break this this green box here, obviously what happens is we will break all the way back down here, back to this spot here at our 6.4K. So that's the bearish scenario, which still makes sense as well, because at this point this can be easily what we call a bull trap. What's a bull trap is it's what the name actually says. We go there, people get very excited and think that, okay, this looks like we're gonna break above this this channel and we're going to a higher high, right? But the problem is, so what I always do is I always test the theory. Is this a higher high, yes or no, with the CME chart. So what I do is I opened up the CME chart, and what do you know, this is the same point that we're talking about before. And as you can clearly see on the CME chart, there is no wick above the channel. This is still perfectly a normal channel without any peak above. So the CME chart is actually a chart that you should, as a trader, you should always be looking very carefully. And what I always do is, like I said, I always test my theories from the spot price onto the CME chart. And the CME chart is actually showing me that this is, and as you can see, this candle, this daily candles right now is not very pretty. But let's go into the 12-hour candle, and we are forming some sort of like, we just closed like 30 minutes ago. A doji candle, and that can easily become a reversal pattern as well. And like I said, we do not have a higher high. So this is actually a perfect spot where that could have been our bull trap, right? So people get excited, get into a position and think like, okay, well, this is most likely, and front run everything, and this is most likely going to be pushing up, and then get smacked down. So what do you do in these kind of situations? In these kind of situations is actually you sit down and you wait. That's basically what you have to do. So what I'm doing is, like, it's very simple. I'm just waiting for this box to be happening. So in case, very simple, if we break down here below the 6.9K, then I'll be shorting, obviously, and most likely we'll be ending up here. If we start to close candles here above 7.2K, I'll be longing this and we'll be trying to close my position over there. So that's pretty much what I'm currently thinking of what is going to happen for now. But obviously, weekend is coming up, so if things don't move fast today, then tomorrow I'll be taking, well, I'll still be analyzing, of course, but I won't be trading. So no matter what happens during the weekend, even if it breaks that green box for me, I will still not be doing much. But of course, I'm very interested in everything what's going on, so I'm definitely going to keep you guys updated as well. But personally, I won't be trading. So if today nothing happens, if we don't break that green box today, I won't be in a position. If we don't break that, if we don't break the 7.2K and close candles above it, I won't be taking any trades personally as well. Other than that, what I wanted to show you guys is something that is very cool as well, and we've talked about that guy in my, I don't know which video it was, in one of my previous videos about divergences, right? So let me remove all of this first, and let's go to the 4-hour chart. And what I wanted to show you guys is the following, and here you have the divergence cheat sheet. And here last time I only showed you 4 different kinds of divergences, but like I told you guys, there's actually 6. And these are very, 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 you know, it doesn't happen, or it's not much used, but now you can learn them as well. They called exaggerated divergence. But anyways, what I found on the 4-hour chart was hidden divergence. And hidden divergence is when the price makes a lower high, but the RSI, or the indicator that you're using, is making a higher high. So the trick that I'm using is as the following. What you do is you put your price not in a candle chart, but you put in a line chart, and to make things a lot easier to see. Let me remove these EMAs for now, and it will make things a lot easier to track, right? So we have here this price here from the 13th of April until here, the 17th of April, and as you can see, the price made a lower high, right? It went down, as you can see. Oops. All right. Okay, so price went down, right, from this spot to this spot. You can see it. And then what you do is, of course, you check it on the RSI. Wait, check the RSI from that same period. And what do you know? From this period, from the 13th of April to the 17th of April, today, as you can see, it made a higher high. Oop, from this arrow here. And what is that? This is it. Bearish. Here. So yes, we also have hidden bearish divergence already on the 4-hour chart. So what usually a hidden bearish divergence means is that we will have a continuation of the pattern, and the continuation of the pattern means, in this case, of course, it is a downtrend overall, as you can see. So that's one of the reasons why I am still pretty confident that it was a bull trap, and that we will most likely be seeing lower prices by next week or during the weekend. Well, during the weekend there's not much volume, but all I'm saying is most likely the whole scenario that I have had in mind is still the same. Although there's one thing that that changed. So if we don't make a quick break here to this spot here, the head and shoulders pattern that that was a possibility before is no longer valid. So if we don't break that support line here, I'm actually quite more bullish in the medium time frame. What I mean is, most likely what we will see is like some bounces here to the 6.4, then bounce back up, then bounce back maybe somewhere here, and then actually I'm thinking that it will make a pump up during the halving. It's like, you know, people will still be maybe following because there's a halving or some sort of action or something like that. We don't know. We'll see. But for now, it's just a waiting game, basically, right? So I still do think in my original scenario that we will be ending up around here, around the 6.4k level by next week, which is something that I have talked about for the last, I don't know, couple of days already. But I wouldn't be surprised as well to be going, that we go up one more leg up higher towards the green box as well, right? So hi Javen Bulayo, welcome to the channel. So we have to just keep in mind, and just one thing that you have to understand is we don't control the market. The market will always do what the market wants to do, right? So as a trader, you have to stop thinking about like, okay, I can do this, I can predict the future. You cannot. Nobody can predict the future. Although my channel is called the Dang Oracle, it's just a play like a word play on what I'm doing. But I'm not a financial advisor. This is not a therefore this is not the financial advice. So you still do what you want to do. I'm just logging down basically what I'm doing for myself personally, and maybe it will help you a little bit, or maybe you can learn something from it. Because I do think that in these special times, that we have to be mindful of what we're doing on a daily basis, and we cannot just lay around and do nothing all day, right? So I keep myself focused by doing these kind of streams, and it just also tests me to see if what I'm doing is correct on a long-term basis. But I won't be right all the time, obviously, right? Like yesterday, I thought there would be continuation to the downside after we broke down and closed very, very, very far below the yellow line, or the EMA 21. But what we have is a bullish engulfing candle that broke even above out of my my expected 7,000.2K. So yeah, I was wrong in that part. But like I said, it's all about long term. You have to be right more times than wrong, and then it will be profitable. That's basically what the trading game is about. So yeah, I hope you guys realize that as well. So for now, basically what I'm looking forward is, do we break and start closing candles here above this 7.2K, then I'll most likely be entering a long position and extend it all the way up here towards the 7.7 to 7.8K, whatever this zone is here, liquid zone is here. If we get rejected from here, then I consider this a bull trap, and we will most likely, once we break this green box here, the 6.9K, if you want to be more safe, 6,850, but I think 6.9K is already the, you know, where things gets very, very dicey for Bitcoin. So I think if we break down 6.9, then most likely we'll head back down probably to like the previous low here at like 6.6, and then make a small bounce maybe, and then end up most likely where my target is at 6,400 here. 6,400-ish. We already had a test here, as you can see, of that support line. So I do think that if we break down, we'll definitely make a lower low, a little bit lower, and the bottom of our channel again. And if we don't break this, if we break this channel, obviously the next support line is at 5.8-ish. Like I do think that eventually we will be getting there, but that's a little bit, you know, that's still as long as it's not happening, we can't say anything. Let's look at our historical volatility percentile, and we can see that it is still contracting after that big move of $1,000 that we've seen down and up. We're actually still contracting, and that means that we will have, like I said, I'm predicting around, yeah, before the end of the month, right? The signal looks very getting very mature, and by the end of the month most likely we will get a very big move once again, most likely $1,000 to $2,000 once again. So as a trader, that's basically what we were looking for, right? Right now we dropped out of that channel that I'm here with the RSI, and we actually still have, like I said, we still are looking quite good actually. So yeah, it's still really possible that we are going up one more leg. Let's look at the expected move charts. Expected move charts for the 12-hour is right now the first this upper band of the first standard deviation is at 7,250. So if we get there, that also means that we will be closing above that 7.2K that I've talked about. So that would mean that there's a process, then I would be having to enter along. The bottom standard deviation is at 6,950. So 6,950 is on the bottom. That would also mean that we will be hitting that green box that I've talked to you about, that critical green box that we have to be holding. If not, we will be most likely going down 6.6, something like that, and then eventually 6.4 most likely after a small little bounce. So right now, as you can see, it's still curling up a little bit. So that means that the probability that we are going one leg up higher is a little bit higher. So it's like, let's say it's, yeah, it's a little bit higher. It's curling up, let's say like 60% that we're going up then down. So that's what the probabilities are saying. Let's look at a little bit of the shorter term charts. And as you can see here, stock RSI is starting to curl down on the 4-hour chart. So that means that everything is starting to weaken a little bit. But that doesn't mean that, like I said, that doesn't mean that we still cannot go up a little bit more. RSI is still curling up. RSI is still above the EMA, as you can see. It's actually making a move up higher towards the bullish control zone. If you see the pattern that I've drawn here, see, we actually still have a lot of space, but we can also get rejected here at the bullish territory. So yeah, that's basically what I'm looking at. So there are two scenarios. It's pretty simple. We are exactly at the same spot as we are like last week. Do we break 7.2K, close some candles above it? Most likely. Green box, 7.7, 7.8, maybe 7.9 even, or you know, somewhere there. Green box on the bottom. Do we break it? And then we go a leg lower and go back down to 6.4K, which is our bottom of our channel. So what is it going to be? First of all, the bullish signals are, well, RSI is still curling up. Boom. Traditional markets still seem to be very strong. So Nasdaq, although yeah, it's starting to curl now down now a little bit. So maybe we'll know more in like around 45 minutes actually, because 9:30 this the New York Stock Exchange will be opening, and by tomorrow we'll have the close of the stock market. So I think in 45 minutes we'll actually know a lot more. Let's look at SPY. Pre-market is already starting to drop a little bit, but that's what I'm expecting. I think we'll open the market at around 282 most likely. The previous candle bottom, yeah, somewhere 282, 281. I think we'll end up opening there, and let's see what happens then. If we get a big rejection, then yeah, and then yeah, CME charts. Like I said, this is not looking like a very healthy candle so far, but it's a daily candle, right? So we can day is still long. We still have to wait. It still is above and is an engulfing candle, but this doesn't look like a very strong candle for me. So this could very easily be a bull trap. A bull trap. We have a hidden bearish divergence. Yeah, personally, yeah, but of course my personal opinion doesn't matter. I trade on technicals, so that my personal opinion doesn't matter at all. I still do think that we are going down to the 6.4K, and we'll get a strong rejection by tomorrow and during the weekend. But you know, something that we cannot predict. And yeah, something else that is pretty bearish once again is the open interest. As you can see, during that pump here, during that pump from this spot to this spot, the open interest dropped down. As you can see here, see, price went up, but open interest dropped down continuously, basically. So that's once again not a very strong, you know, that's not a strong signal. We just have to say that it is. It's not very strong, this pump, and it's not very convincing. Although, like I said, people they see the news and then they get trapped in that position. Yeah, this is not very pretty, and I think I just can't imagine that some people are already like thinking, yeah, the prices are so low now because it crashed. Look, and it's been going up for like, how long has it been going up? For like a long time now already, right? The rebound, let's put it on the weekly chart. How many weeks did we have a bounce? So for the last, we had a major crash, and for the last 1, 2, 3, 4 weeks we've been going up. So that's like almost a month. So people are thinking, yeah, this could be a V-shaped correction, things will be back to normal. But yeah, I'm afraid that won't be the case. I think the effects of the coronavirus will be delayed, and we will get a stronger correction. And hopefully it's only a W correction, which is something I've mentioned before. That is most probable situation for me, that we get that W correction. Let's take a look at the VWAP ratio to see if anything changed there. Most likely not, though. Let's see a little bit, zoom a little bit closer, and we can see that the purple line and the blue and the pink line is still going down and far away from each other, so nothing changes there. Boom. what do we see here? No, nothing changes here. All pretty much all good. Oh, pre-market SPY went up a little bit, 286. So Nasdaq is Nasdaq Futures are starting to start slowing down here. So I think once they figure out that that it was a hoax, and I think most people will be starting to be in panic and then sell a lot of stuff once again. Let's look at Binance, our Chinese traders, and see what they are doing. So let's see, 54% on and 45%, so still overall more short than long. And here 47.2 and 52.8 positions are still long. So still Chinese traders are still a little bit more on the long in the position, but the overall count is obviously more short. So yeah, that says maybe there is still a leg up. Who knows? We will not know until most likely later tonight, when the stock market opens. Yes, and this is the candle that we are all waiting for. Let's go zoom in a little bit here on the 4 hour. Yeah, and zoom in a little bit. Yeah, so everything else is still what's correct, what we've been discussing. This can be seen as a descending triangle because we keep making lower highs, right? This is just a bull trap, but it is still a lower high, as you can see if you compare it with this. It's still lower high. Still lower high, guys. Still a lower high. But this is starting to look quite bullish, to be honest, because as you can see here, we are making a nice push upwards. And if we break this this zone here, this is our first major resistance at 7.1k. Like I said, there's a pivot line here. Price keeps getting pushed down there, but at one point it's going to balloon up, right? So maybe, but that would match our theory that we would be hitting our EMA 55 or our EMA 200, right? Let's put the EMAs back here. There, it's right there, guys. It's right there. Here, our green box is right here. So yeah, it's a waiting game. 30 more minutes for the stock exchange starting to open. Very exciting. But I'll keep you posted tomorrow, of course, on what happens or what happened for me. But until then, I hope tomorrow I won't have any technical issues and things will be working out normally and that I can start with normal time at 7:30. So yeah, until tomorrow, stay home, stay safe, and of course, stay COVID free.